Good morning, everyone. Well, yesterday's attempt by the Bank of England to talk down interest rates through forward guidance failed miserably. The Bank of England pledged to keep its asset purchase program intact until unemployment comes down to 7% from 7.8% currently. This is much like the Fed's pledge to keep rates low until unemployment hits 6.5%. In theory, that should mean a long time of easy policy. I mean, the Bank of England's own forecasts don't have unemployment coming down to those levels until the end of 2016 at the earliest. But the bank introduced 3 conditions around this pledge that were sufficiently flexible that the market immediately questioned the bank's commitment to keeping rates low. I think the Monetary Policy Committee felt the need to include these outs in order to maintain their credibility, and I doubt whether they'll ever really trigger them. But nonetheless, they undermine the very purpose of forward guidance, which Nobel Prize-winning economist Paul Krugman famously said is for central banks to credibly promise to be irresponsible. As a result, sterling interest rates actually rose, not fell, and the pound strengthened. Now, I think the market's being unduly pessimistic. Central bankers feel they have to maintain their credibility, they have to talk the talk, regardless of what they actually do. Over time, I'd expect the market to realize that the Bank of England has no intention of triggering these clauses and for sterling to weaken as a result. But it's likely to take some time for people to become convinced of this while officials are still saying the opposite. So we could see further sterling strength for some time. In fact, the market's doubts about the Bank of England echo its recent doubts about the Fed, too. Even the dovish members of the FOMC have reasserted that the Fed's likely to begin tapering off soon, but the dollar just continues to decline. It appears that the market doesn't believe these Fed members either. Similar doubts have occurred with regards to other central banks' guidance on rates too, such as the Riksbank or Norges Bank. As the message from central banks becomes more muddled, the market looks more and more closely at the data. I'd expect we're in for a period of rising volatility as each number gets assessed more and more closely for its importance with regards to policy. I think the fundamentals still point to a stronger dollar, but I have to admit that the technicals point to a weaker dollar for the time being. Eurodollar, for example, managed to penetrate the upper boundary of the short-term trading range between 131.85 and 133, the figure yesterday. I expect the pair to continue moving upwards for the time being towards the highs at 134.15. This is Marshall Gittler, head of Global FX Strategy at IronFX, wishing you solid trading.